Good morning, everyone. So before we start, and every time I see the topic I'm talking about, I keep asking myself if the organizers intentionally chose this topic and chose a big guy to really talk about fintech's lunch. So thank you, Jarida Tajrida. Thank you, Mr. Khalid Hilal, for your kind invitation to this wonderful and essential conference. Distinguished guests, ladies and gentlemen, thank you for giving me your time today. I would like to answer the question raised by the title, is fintech eating your lunch? I would like to discuss fintech and its impact on the financial sector, but really on our future lives. We have seen disruption in most sectors, all driven by technology, be it communication, healthcare, and finance during the COVID period. Technology has moved from being a pillar by itself to really become a key component of every single industry or subsector. Here are some numbers. As of 2022, the fintech space is worth more than 179 billion and growing rapidly. In 2015, Goldman Sachs estimated that 4.7 trillion of revenue that traditional financial services are now making will be transferred into fintech. Today, when you look at these numbers in 2022, we will have reached close to around a half of that number. It is not an exaggeration to mention that fintech has not only been transforming the traditional banking industry, but also disrupted the financial services industry as a whole. Fintech innovations has not only rethought payments and lending, but has democratized, decentralized, and disrupted capital raising, as in crowdfunding, lending, as in digital lending, wealth management, as in robo-advisory, insurance, as in insurance tech, real estate, as in tokenization. Even more interesting is the advent and the use of the blockchain, the fastest growing segment of the fintech industry and the backbone of any future digital currency and secure transfers. A really a new instrument for the future. By 2024, the blockchain tech is set to hit 20 billion. The question that arises within the context of financial services is whether this is a revolution or an evolution. It is important to say that financial services, however archaic it may seem, has always been in the forefront of using technology by proving its interconnectivity, systems, products, adopting online presence. Strangely, the average user might not quite see this, simply because technological innovations in financial services has been concentrated in the back and middle office and not in the front office. Aside from online banking, which is now more than 25 years old, the last major consumer-centric innovation has been the credit card in the 1950s or the 1960s in the Ooredoo presentation. Today, what we're seeing from the plethora of fintech technologies, solutions, and companies is a major threat to the financial services front office, and that's the big change. These technologies are promoting more efficient processes, less man-made errors, improvement in customer service, and better security. If we take the banking sector, for instance, it is easy to notice fintech's current and future contribution and impact, especially in the following areas: enhancing competitiveness, improving the quality of customer service, 24/7 availability, reducing the number of physical branches and human resources, opening up new investment opportunities, providing end-to-end security, and optimizing risk management. Really, when you look at more advanced economies, let's take the UK, for example. Between 2015 and 2019, the UK has lost more than 4,735 branches. This is close to half of the number of branches in the UK. If you look at the US numbers, they have lost 13,000 branches between 2008 and 2020. This said, at the same time, loans at the private sector, for instance, has increased by around 11% during the same period. So really, the banking industry is still healthy, very healthy actually, but physical branches are quickly becoming a relic of a bygone era. The key functions provided by branches are now provided electronically. Here's some more fun stats on banking from different industry reports. I was preparing for this speech. Only 20% of US consumers would rather pay a visit to a physical bank location than do their business via digital channels. Bank teller usage declined 7.2% since 2015 every single year. According to PwC, 55% of bank executives view non-traditional players as a threat to the traditional banks. The study was done in 2020, so we're not taking the post or COVID growth within this segment. 48% of use mobile banking to transfer funds between their own accounts or send money to someone. And I believe this number is higher in Kuwait. Companies such as TAP, such as Spare, are really leading in this business. Up to 28% of banking payment services will be at risk of disruption to new business models brought upon by Fintech. But is it just banking and the other financial services subsectors safe from such encroachment? The answer is a bold no. For those who used stockbrokers 25 years ago, 30 years ago, especially for service brokers, the industry has evolved tremendously. The discount brokers emerged to quickly eclipse the large traditional brokers. Now we're hearing about companies such as Robinhood eating market share from the larger players. My business, asset management, has also been transformed on many levels, whether in the back, middle, or front office. Robot trading, algorithmic trading has been growing tremendously. Today, 60 to 73% of equity trading in the US is now done by machines. Robo-advisory is also growing quickly in the business of wealth management. Assets under management in the robo-advisor segment has reached 1.6 trillion in 2022 and is expected to have 543 million users by 2027. So really big numbers. But what is the investment world doing? We talked a lot about banks, but now let's see what the investment world is doing. Many things, actually. I can probably discuss what we're doing in Kamco Invest, and maybe with that probably commence my 1-minute advertising break, so bear with me. So we're using this actually event really this esteemed inaugural event to introduce our own digital solution, the Kamco Invest app. The app offers a very large variety of our products and services online with no or minimal human interaction. Yet we're really excited about it for two big reasons. One, we're 24/7 with our clients. We're closer than any time before. But more importantly, we're also able to penetrate a larger client base. And this is the most important thing. The specific client base is the retail market, which we would not have been able to approach without an army of wealth and relationship managers. Unlike banks, investment companies do not have branches. Our board and leadership have prioritized this development over many other projects, given its necessity. This will quickly becoming part of our corporate DNA. Additionally, Kamco Invest decided to take a more proactive approach to invest in Fintech, via its recently launched Jedi Fund, a hybrid fund that invests in technology, with co-manager Fadi Sharah, who will be presenting today. Not only are we excited in the asset class itself, but we have invested our prop money, really as a discovery program, to see what's happening in new Fintech, to have a front seat in what's happening in this industry. Today, investments like Bolt or Mercury Bank have been hyper-growing and quickly dominating the incumbent leaders in this field. For example, Mercury today, for instance, has almost doubled from 3.1 billion to 7 billion in a period of 6 months in 2001. And in now direct collision with the segment leader, the Silicon Valley Bank, which has decades of experience and is an incumbent in that business. As also an investment banking firm, Kamco Invest, we have to keep a close eye and full attention on all aspects of Fintech, especially crowdfunding and decentralized finance. Why? Simply said, if we do not embrace these technologies and incorporate them in our business, they will be quickly an existential threat to our business. Total value of assets in decentralized finance is around 90 billion in December 2021. Today, 40% of financial services companies believe blockchain will change how services are delivered, and this is very, very important. Technologies such as blockchain and artificial intelligence are ushering in new ways of doing business. Some examples: payment and decentralized ledgers, initial coin offerings, tokenization of stocks, bonds, and alternative assets. And something that I think the previous presentation I've discussed, the digitalizing the KYC process and the pain that's associated with it. There's a lot that has been done by PASI and others, and a lot of thanks to them, but there's a lot more to go. In this sense, really, blockchain technology could improve significantly on traditional financial services industry while enabling new business models through technology. So it brings us to the next question. What is needed to nurture such innovations in this region? I think number one is standardization, creating standards for transfer systems, local international payment gateways, settlement, exchanges, tracking. Like SWIFT, which revolutionized bank transfers, these standards should facilitate interworking between the stakeholders of this industry. Number two, accommodating and forward-looking regulators. Innovations need freedom. Regulators in the region should not only focus on the regulatory aspect of the business, but should put equal or more importance on helping creating the ecosystem that generates innovation. Harris Sippy, a visionary industrialist, once said, "The need for security often kills the quest for innovation." And in the Middle East, we're in love with our comfort zone. I think it's so important that today, two companies who are presenting Both of them Kuwaiti companies have decided to go with the Central Bank of Bahrain to build their business or to go into their sandbox before coming to Kuwaiti one. That should be an example. But this said, there's a lot of development, I think, in the last 2 years in the Kuwaiti sandbox. I'm really excited about what's happening there. But people today need to take a little bit of risk. Regulators really need to push beyond their job of just regulating and protecting. The third thing is a funding ecosystem. Large strides have been made in building venture capital systems in the region. I'm very jealous of what's happening in Saudi and what's happening in the United Arab Emirates. We're still far from our ambitions, where we finally started seeing the fruits of many years of labor. The new fintech startups are not just challenging the status quo, but are fighting with some of the largest corporates in every country in the GCC. A wink wink, basically the banks and the telecoms. So they need our support. So in conclusion, I hope my message is clear. The question is not will fintech eat your lunch, it has already been going for your dinner too. Thank you again for lending me your ears.